Complete your TV viewing experience with the best of Hollywood entertainment and news. Get the Times Network Value Pack at just ₹13. Ask your cable or DTH provider now.
Recapping the US markets, Dow closed with a steep cut of 600 points after the factory gauge dropped the most in a decade as Apple cut its sales outlook, adding to concerns that global growth is finally slowing. The 10-year treasuries rallied and the yen strengthened, and S&P 500 tumbled 2.5% to the steepest sell-off since Christmas Eve, while the 10-year treasury yield sank to 11th-month low. The sell-off also came back on concerns of a growth slowdown, and even the US manufacturing gauge plunged by most since the recession in 2008. The ISM index dropped to two-year low, led by new orders slumping the most in almost 5 years and the steepest production slide since early 2012. Just 11 of 18 industries reported growth, the fewest in 2 years.
And Apple seemed to be the center of all the action that transpired on Wall Street. The shares took a hit of nearly 10% to close near $142 mark, suffering its biggest single-day loss in 6 years. The move came in the wake of the company's stunning announcement on Wednesday that it foresees its fiscal first quarter revenue falling short of its previous expectations. Apple said it expects sales for the quarter that ended in December to come in at $84 billion, down from an earlier estimate of $89 billion. Blaming the Chinese slowdown for the shortfall, the tech behemoth lost $450 billion in market value since its peak of about $1.1 trillion last year.
And Goldman Sachs has also raised red flags. They're saying they see potential for further downside to their FY19 numbers depending on the trajectory of Chinese demand in early 2019. They say that they do not expect the situation to get better in March and would remain cautious on the region. That's the warning coming out from Goldman Sachs.
Meantime, New York-based pharma giant Bristol-Myers Squibb will buy US biotech firm Celgene Corp in a $74 billion cash and stock deal, instantly creating a rival to the world's largest drug makers. The merger plans underscored the company's efforts to diversify in the field of cancer treatments, with investors in recent months questioning their growth prospects. In the deal, Bristol-Myers Squibb gained Celgene's blockbuster Revlimid treatment for multiple myeloma. The company said the new entity would also offer 9 products with more than $1 billion in annual sales.
And moving on to the auto sector, Ford Motor finished 2018 auto sales with a 3.5% yearly decline, while the December sales saw a steep fall of nearly 9% on a year-on-year basis. The passenger car sales fell 27.8% in the month, while truck sales dropped 3.8% and sport utility vehicles sales fell 4.4%. Ford's passenger car sales tumbled further in December. Nearly 5 of the 6 December sales came from SUVs, vans and trucks. Average transaction pricing came in at a record $38,400 for the month, up by $1,600 on a year-on-year basis. Following the poor auto sales and impending slowdown concerns, the automaker announced to follow General Motors' strategy in publicly reporting vehicle sales once a quarter rather than monthly.
Trade war isn't the biggest issue for China and the US, is the word coming from billionaire investor and market guru Ray Dalio. In a LinkedIn post, Dalio argued that investors should look past the US-China trade war and the volatility it has caused the markets, and instead focus on managing the two countries' diverging cultures in a productive, beneficial way. He points that China's culture and system has worked well for the country for a long time, and the two countries are better off learning from each other rather than going to loggerheads.
Complete your TV viewing experience with the best of Hollywood entertainment and news. Get the Times Network Value Pack at just Rs. 13. Ask your cable or DTH provider now.